Hi everyone, my name is Muhammad Hanif. Before we start the video, I will introduce you to all my group members. First, we got Muhammad Noor Ashraf. Second, Iman Shakir. Third, Muhammad Haziq. Fourth, Faizul Akmal. And last, Muhammad Farhan.
Hi everyone. Today we will learn about trade association. You will learn how to define trade association, and then you will determine the resident status of trade association, and then you assess the gross income of trade association, and lastly you will explain the income tax exemption for trade association. To guide our discussion, we will start by understanding what trade association, and then next we will determine the factor that establish a trade association resident status. And then we will review the key income source for trade. And finally, we will discuss the relevant tax exemption under the Income Tax Exemption Order 2005.
We will start the discussion with definition of trade association. Section 53 subsection 3 defines a trade association to be any association of person, of partnership, or of person and partnership formed with the main object of safeguarding, of promoting the business of its members. For the purpose of income tax, a trade association is deemed to be a body of person and not partnership.
Now, let's discuss the key condition for an organization to qualify as a trade association. First, membership requirement. All members must be actively engaged in carrying on a business. Individuals who are employees or not involved in business activity are excluded. Second, organization objective. The primary goal of the organization must be to safeguard or promote the business interests of its member. But if the organization allow membership for individuals not engaged in business, such as employees or non-business entities, it will not qualify as a trade association.
After the condition as trade association, we need to consider their resident status. The resident status of a trade association is determined by examining where its management and control are exercised. For the criteria, if or any time during a calendar year, the management and control of the trade association affair or business are exercised in Malaysia, the trade association will be considered a resident in Malaysia. This means even a single instance of exercising control within Malaysia during the year, it is sufficient to establish residency. Then, after trade association resident status is established, it remains presumed as resident unless proven otherwise. This presumption ensures clarity and continuity in the association, legal and tax obligation unless there is strong evidence to the contrary.
Source of income are divided into two, which is business income and non-business income. Business income include revenue generated from interest fee and subscription. These are treated as revenue in nature and contribute directly to the organization operational income. Non-business income is specified under Section 4 of Income Tax Act. For example, Section 4C, dividend and interest income, and Section 4D for rental income. Special donation and subscription are treated differently depending on their purpose. General donation are considered revenue receipt, such as special subscription collected from member during festive occasion. Donation for special purpose, contribute for alteration, repair, or improvement to the premise are classified as capital receipt.
Income tax exemption. As we know,
source of income is from subscription and interest fee. So, statutory income from member subscription fee shall be exempted from tax and interest fee remain to be taxed. Besides that, common revenue, expenses and capital allowance will be restricted on the proportion of gross income basis. Gross income from the trade association members' subscription fee after reduce. First, any amounts of expenses incurred in the production of the income. Second, any allowance failing to be made pursuant to Schedule 3 of the ITA in respect of that income. According to Income Tax Exemption number 19, Order 2005, PU A 119/2005. The amount of expenses and allowance shall include an amount of expenses and allowance which are common to the income exempt and other non-exempt income, which amount shall be determined. First, in relation to expenses formula, A times to B divided by C. A is common revenue expenses, B is gross income from its member subscription fee, and C, gross income from its business source. Besides that, in relation to allowance formula is A times to B divided by C. A is a common revenue expenses, B is a gross income from its member subscription fees, and C is a gross income from its business sources. This is our example for in relation of common expenses, and this is an example for common capital allowance.
Right now, I am going to talk about tax rates. Trade association lies within the scope of body of person. Body of person refers to an unincorporated body of person, including a cooperative society, a club, an association, a trust, and a Hindu joint family, but excluding partnership and company. The rates of tax are the same as for individuals. For resident, it follows the scale rates, and for non-resident, it follows the flat rate, which is 30%.
For example question, the statement of profit or loss account of a trade association for the year ended 31st December is as follows. For Notes 1, employees' remuneration, transport and stationery is a common expenses. For working, common expenses for member subscription fees is 200,000 times to 1 million divided by 2 million. We know that 200,000 is a common revenue expenses and 1 million is a gross income from its members' subscription fees and 2 million is gross income from its business sources. For seminar fees and trade association activities is same to member subscription fees formula. For common capital allowance, for members subscription fee is 500,000 times to 1 million divided by 2 millions. 500,000 is common capital allowance. 1 million is a gross income from its member subscription fees, and 2 million is gross income from its business sources. For seminar fees and trade association activities is same to members' subscription fees. The calculation of tax payable for year of assessment 2019 of trade association is as follows. Member subscription fees 1 million, you need to less common expenses 100,000, and you can get adjusted income 90,000.
900,000. And you need to less common capital allowance 250,000, and you can get a statutory income from member subscription fees, but it is exempted for tax. For seminar fees, 600,000, you need to less expenses. For example, rental of seminar halls 150,000, foods 50,000, common expenses 60,000, and you can get adjusted income 340,000, and you need to less common capital allowance 150,000, and you can get a statutory income from seminar fees is 190,000. For a trade association activities, 400,000, you need to less expenses. For example, consultant fees, 100,000, common expenses, 40,000, and you can get adjusted income 260,000, and you need to less common capital allowance 100,000, and you can get a statutory income from trade association activities 160,000. Finally, you need to total up the statutory income from members' subscription fees, statutory income seminar fees, and trade association activities. So the total up is 350,000 for the chargeable income.